Have you ever wondered, how did the stock market begin? Who came up with the idea of buying and selling company shares? And how did a small marketplace hundreds of years ago evolve into a global financial system worth trillions of dollars? Today, millions of people invest in stocks through just a smartphone. Some build lifelong wealth, while others lose fortunes in a matter of days. But the stock market wasn't always like this. Its history is filled with incredible innovations, financial revolutions, economic crashes, and inspiring comeback stories. In this video, we'll travel through more than 400 years of history, from the world's first stock exchange to today's digital trading, whether you're completely new to investing or simply curious about financial history. This video will help you understand how the stock market became one of the most powerful wealth-building systems ever created. Let's begin. Chapter 1. Life before the stock market. Imagine living 500 years ago. There were no smartphones, no online banking, no investment apps, and definitely no stock exchanges. Large trading voyages required enormous amounts of money. For example, merchants wanted to sail across oceans to buy spices, silk, gold, and other valuable goods. The problem? These journeys were extremely risky. Ships could sink, pirates could attack, storms could destroy everything. A single failed expedition could bankrupt a wealthy merchant. People needed a smarter way to share both the risks and the rewards. This challenge eventually gave birth to one of history's greatest financial ideas: shared ownership. Instead of one person paying for an entire voyage, many investors contributed smaller amounts. If the voyage succeeded, everyone earned a portion of the profits. If it failed, the loss was shared. This simple concept became the foundation of modern investing. Chapter 2. The birth of the first public company. In 1602, a historic event took place in the Netherlands. The Dutch East India Company, known as the VOC, became the world's first publicly traded company. Instead of borrowing money for every expedition, the company sold ownership shares to the public. Anyone with enough money could buy a share. These investors became partial owners of the company. If the company made profits through international trade, shareholders received dividends. This was revolutionary. For the first time in history, ordinary investors could participate in large commercial ventures. People could also sell their shares to others without waiting for the company to close. This created a market where ownership could be bought and sold freely. Many historians consider this the true birth of the modern stock market. Chapter 3. The world's first stock exchange. As more investors wanted to buy and sell shares, they needed a dedicated place to trade. This led to the creation of the Amsterdam Stock Exchange. Investors gathered daily to negotiate prices. Supply and demand determined share values. If many people wanted to own a company, prices increased. If investors lost confidence, prices fell. This simple pricing mechanism remains the foundation of today's stock markets. Even now, whether you're trading in New York, London, Tokyo, Mumbai, or online through a mobile app, prices are still determined by buyers and sellers. Chapter 4. The stock market spreads across the world. As global trade expanded, more countries developed their own financial markets. London became one of Europe's financial centers. The London Stock Exchange officially formed in 1801. Meanwhile, in America, brokers met beneath a buttonwood tree in New York in 1792. They signed what became known as the Buttonwood Agreement. This agreement eventually evolved into the New York Stock Exchange, or NYSE. Over the next 2 centuries, stock exchanges appeared across the globe. Countries realized that businesses could grow much faster if they raised money from public investors instead of relying only on banks or wealthy families. The stock market became an engine for economic growth. Chapter 5. Why companies sell shares. Let's understand this with a simple example. Imagine you start a technology company. Business grows rapidly. Now you need new offices, employees, research, and better equipment. You have 2 choices: borrow money from a bank or sell part of your company through the stock market. If investors believe your company has a bright future, they'll buy shares. The money they invest helps your business grow. In return, investors hope the company's value increases over time. This is why businesses from startups to global corporations choose to list on stock exchanges. It's a partnership between companies seeking capital and investors seeking growth. Chapter 6. The Great Stock Market Crash of 1929. One of the most dramatic chapters in financial history occurred in 1929. During the 1920s, stock prices rose rapidly. People believed prices would continue climbing forever. Many investors borrowed money just to buy more stocks. Eventually, prices became disconnected from reality. Then came Black Tuesday. Panic spread. Millions rushed to sell. The market collapsed. Billions of dollars vanished. Businesses failed. Banks closed. Millions lost jobs. This disaster helped trigger the Great Depression. Governments learned a painful lesson. Financial markets needed stronger rules, greater transparency, and better investor protection. Many regulations introduced after this crash still influence markets today. Chapter 7. Recovery and Modern Growth. Despite major crashes, the stock market continued evolving. Companies like Coca-Cola, IBM, Microsoft, Apple, Amazon, Google, Tesla, and many others became symbols of innovation and long-term wealth creation. Investors discovered an important lesson. Markets may fall in the short term, but over long periods, quality businesses often continue growing. This is why many successful investors focus on long-term investing instead of trying to predict daily price movements. History shows that patience has often rewarded disciplined investors. Chapter 8. Technology changes everything. Not long ago, stock trading looked completely different. Investors called brokers on the telephone. Paper certificates represented ownership. Trades could take days to complete. Today, everything happens digitally. With a smartphone, investors can buy shares in seconds. Real-time charts, financial news, AI-powered research, and instant transactions are available to almost anyone. Technology has made investing faster, cheaper, and more accessible than ever before. Millions of first-time investors have entered the market because of this digital revolution. Chapter 9. Famous stock market crashes. The stock market has experienced several major downturns throughout history. The 1929 Wall Street crash, the 1987 Black Monday crash, the dot-com bubble in 2000, the global financial crisis in 2008, and the COVID-19 market crash in 2020. Each crash created fear. Many believed the market would never recover. Yet history repeatedly showed that economies adapt, businesses innovate, and markets eventually rebuild. While every crisis is different, resilience has been one of the defining characteristics of the global stock market. Chapter 10. The Rise of Retail Investors. 2500-2730. Today, investing is no longer limited to wealthy individuals or large institutions. Anyone with internet access can start learning about investing. Fractional shares allow people to invest with small amounts of money. Educational videos, financial news, and investment platforms have made financial knowledge more accessible than ever. This democratization of investing is one of the biggest changes in stock market history. Chapter 11. The Future of the Stock Market. The next chapter of stock market history is already unfolding. Artificial intelligence is transforming financial research. Blockchain technology is changing how assets may be traded. Algorithmic trading now executes millions of transactions every second. Sustainable investing is encouraging companies to focus on environmental and social responsibility. Global markets are becoming increasingly connected. The stock market of tomorrow will likely look very different from today's. But one principle will remain the same. Businesses need capital to grow. Investors seek opportunities to build wealth. The stock market connects these two goals. The history of the stock market is much more than a story about money. It's the story of human innovation, global trade, economic progress, risk-taking, recovery, and opportunity. From Dutch merchants sailing across dangerous oceans to millions of investors trading through mobile apps, the stock market has transformed the global economy. Understanding its history helps us become smarter investors because every major lesson, from bubbles to crashes, has shaped the markets we know today. The next chapter of stock market history hasn't been written yet. Perhaps you'll be part of it. If you enjoyed this video and learned something new, don't forget to like, subscribe, and turn on notifications for BNR Universe. Tell us in the comments, which stock market event in history surprised you the most? And if you'd like more beginner-friendly videos on investing, personal finance, and the global economy, stay tuned. Thanks for watching, and we'll see you in the next video. Disclaimer: this video is for educational and informational purposes only. It does not constitute financial, investment, or legal advice. Always conduct your own research or consult a qualified financial advisor before making investment decisions. Past market performance does not guarantee future results.